Although interest rates are often advertised as a single figure, the reality is that they can vary widely depending on your business circumstances. Hey everyone, Louis DP from Odin Finance, helping you with all your asset finance needs. Interest rates are one of those things that can vary greatly from person to person or business to business. They can vary depending on credit scores, income levels, and a whole host of other factors. The same is true for businesses. Companies with higher revenues and profitability will often qualify for lower interest rates than small businesses or startups. So next time you're shopping around for a car loan, don't assume that all interest rates are created equal. Our goal at Odin Finance is to ensure that we educate all our prospects and clients on why your interest rate is a certain amount. So I wanted to share a few things in today's video that could impact your interest rates. A few of them may surprise you, so make sure you stick around till the end. But before we get into it, you should know that this video must not be construed as professional or financial advice. In particular, you should seek independent financial guidance from a professional who can advise you on your best ways to proceed in your personal circumstances. The first one is the age of the asset you're looking to finance. The newer the asset, the better your interest rate is going to be. Another factor you may not thought about is whether or not you're buying it from a dealer or not. More often than not, your rates are going to be better if you're buying directly from a dealer rather through a private sale. As I mentioned earlier, the newer your business, the more limited your options are. It's not to say you won't get a loan, you're just going to have to pay a higher rate until your business is more established and you can possibly refinance the loan at a better rate. The same goes for your GST registration period. If it's less than 2 years, you're also going to have limited loan options at higher interest rates. The next factor is your residential status. Believe it or not, but some lenders are more comfortable if you're a renter rather than a boarder, because renters are considered less risky. It's even better if you own property, because this gives the lender a fallback position, making you less risky. This factor may be obvious, but nonetheless, an important one to remember: your credit score. Higher credit scores are always going to look better to the lender. And if there's evidence of previous finance, even better. This is because the lender can have a look at your repayment history and make an assessment based on the information. Another important consideration is the amount of deposit you're able to put down, or if you're able to put down at all. The bigger the deposit, the more equity you have in the deal, and lenders often see this as less of a risk. Next is your tax debt. With the transparency and leverage on your credit rating, ATO debts can effectively complicate your ability to finance and secure a favorable interest rate. Obviously, if you're all clear with the ATO and your tax returns are up to date, you will be perceived as a less risky borrower. And finally, the last thing that can impact your interest rate is the documents you're able to provide. The more documentation you are able to provide, the more lenders you have as an option. By providing more documentation to a lender, they're able to get a clearer picture and a better overview of your business. So as you can see, it's all about your business risk profile. If you can show the lenders that your business is not at risk, they'll give you a far better interest rate. But that's it from me on this topic. This isn't necessarily an exhaustive list, but it will also come down to the particular lender. So if you have any questions about something else you think might impact your score, drop it in the comment section below. Otherwise, remember to hit the subscribe button and stay tuned for more tips and advice about commercial loans and asset finance to help with your business growth. See you next time.